Bitcoin slump shakes companies that jumped on the crypto hoarding bandwagon. Hannah Lang. Reuters, February 5, 2026. A sharp downturn in Bitcoin prices has rattled publicly traded companies that built their strategies around accumulating large reserves of cryptocurrencies, raising fresh concerns about the risks of corporate crypto hoarding and its wider implications for investors. In 2025, the number of listed firms investing directly in digital assets surged, driven in part by high-profile successes and a favorable policy outlook under the U.S. presidential administration. Companies believe that holding large amounts of crypto on their balance sheets could generate outsized returns and enhance shareholder value. However, the enthusiasm has been tested as Bitcoin suffers a significant decline this year, dragging many so-called digital asset treasury companies lower alongside it. Strategy's steep slide and forecast queued. Among the hardest hit is Strategy, the company formerly known as MicroStrategy, which became emblematic of the corporate Bitcoin movement after piling into the cryptocurrency starting in 2020. The firm's shares, which traded as high as $457 in mid-2025, plunged to around $111.27 in early February, their lowest level since August 2024. In December, Strategy drastically revised its earnings outlook for 2025, warning that weak Bitcoin performance could swing results from an expected $24 billion profit to a range including a potential $5.5 billion loss. The company also said it would set up a reserve to help sustain dividend payments. Broader sell-off hits crypto holders. Other companies that adopted similar strategies have also felt the pain. Shares of the UK's Smarter Web company fell nearly 18%, while other crypto holding businesses such as Nakamoto Inc. and Japan's Metaplanet saw their stock prices drop sharply in recent trading. The slump isn't limited to Bitcoin. Firms holding other tokens have also suffered. Companies known for accumulating assets like Ether and Solana saw share price declines, reflecting broader risk aversion among investors toward digital assets amid market instability, market forces, and policy uncertainty. Analysts point to several macro trends behind the sell-off. Bitcoin has fallen nearly 20% so far in 2026, erasing gains made since late 2024. One contributing factor appears to be shifting expectations around U.S. Federal Reserve policy, particularly following the nomination of Kevin Warsh as the next Fed chair, a development some see as reducing the likelihood of aggressive rate cuts and shrinking the central bank's balance sheet, which typically weighs on risk-based assets like cryptocurrencies. Bitcoin has also given up all the price gains tied to optimism following the 2024 U.S. election, underscoring a broader erosion of investor confidence in crypto's near-term performance. The world's largest cryptocurrency was last trading below $70,000, about $67,651 as sentiment weakened. Industry reaction and outlook. Some market watchers say the downturn reflects not just a short-term correction, but a longer transition in the crypto market that could take months to play out. According to analysts, movements below key psychological price barriers often signal deeper investor capitulation, especially among corporate holders. This sell-off has sparked renewed debate among investors and executives about the wisdom of hoarding digital assets as a core corporate strategy. The sustained pressure on crypto treasury stocks may complicate capital-raising efforts for these firms, weakening their ability to buy more tokens or sustain operations if prices remain depressed, while institutional investors still have avenues to gain exposure to crypto markets. The volatility underscored this week highlights the risks involved, particularly for companies that tied their fortunes closely to the performance of Bitcoin and other digital currencies.